All right, so let's start with the rapid fire round. The first question is, at what age do you want to retire?
I want to work until I'm able to, so very late, 60 something, close to 70.
How long does it take you to get ready in the mornings?
Not a long time. I'd say half an hour, 40 minutes.
Favorite color?
Red.
What time of day are you most inspired?
Mid-morning.
How many hours of sleep can you survive on?
4.
Fill in the blank. An upcoming fintech trend is blank.
AI.
The city in which the best kiss of your life happened.
Lisbon.
Pick one, Elon Musk or Mark Zuckerberg.
Zuckerberg.
How do you relax?
I walk.
How many cups of coffee do you drink per day?
2 or 3.
A habit of yours that you hate.
I bite my nails.
One word description of your leadership style.
Cooperative.
Ideal vacation spot for relaxation.
The Mediterranean.
Key factor for maintaining a work-life balance.
Do not lose perspective of things, I guess. Yeah.
Okay, well, that was the end of the rapid fire.
This episode is sponsored by Outgrow.co, the world's first all-in-one interactive content builder. Use Outgrow to build quizzes, calculators, tests, polls, forms, contests, and chatbots to generate leads and keep your audience engaged. Sign up for a free trial at https://outgrow.co.
Now we can go into the longer questions, which you can answer with as much time and thought as you like. The first one is, can you tell us more about your role at the Cambridge Center for Alternative Finance and your key responsibilities as the digital assets regulatory lead?
Yeah, sure. So the Cambridge Center for Alternative Finance is a research center with Cambridge Business School. We conduct research on alternative finance, which you can think of as financial innovation and digital finance. We produce research reports and we create tools with data and information for regulators. We also conduct capacity building programs. We deliver courses for regulators and technical assistance, which is about helping regulators to write specific regulations and put together the legislative frameworks. In my job, I'm responsible for coordinating all the work on digital asset regulation and a bit on AI going forward. So again, I coordinate the research we do in this space, and I do help with lectures for regulators, and I'm delivering the technical assistance programs to a number of regulators from across the world, so notably Indonesia and Ukraine.
And so how do these projects aim to impact the financial markets and regulatory landscape in general?
So I guess in digital finance, there's big gaps in knowledge on the parts of regulators because, as you know, the technology is very disruptive and the regulations are not necessarily tech neutral, are not necessarily fit for these activities. So regulation has an important role, first in the sense of removing any barriers to the development of these activities, but also enabling them. And so basically our job is to capacitate regulators to do this in a proper manner, to make sure they have the knowledge, address any gaps that exist in those institutions, to then allow them to devise these regulations, obviously taking into account the different policy preferences in different jurisdictions.
And so how does the center approach digital asset regulation in particular?
Well, we don't take a view necessarily, right? We're evidence-based. And our job, as I said, is to capacitate regulators, to make them aware of how the industry works, to address the knowledge gaps on the technology side, on the market side, and also to help them to discuss among themselves, to facilitate the exchange of views among regulators on how the regulation could look like. Now, in terms of the deliverables that we have at the center, if you want, or the products, as I mentioned before, we publish reports and we do comparative research of the regulatory frameworks in different jurisdictions, but we produce what we call digital tools, which are websites where you can find information about the markets. I think the most well-known is the Bitcoin Electricity Index. So my colleagues at the center have devised a formula to calculate the carbon footprint and the energy consumption of Bitcoin. We're also working on a number of other tools. One that is specifically focused on stable coins. So we map the main stable coins in the market. We try to map the flows and provide indicators to measure the risks in different stable coins. And there's a new tool coming where we look into DeFi protocols. We try to answer the question of what's the level of decentralization in these protocols, for instance. So we create this information. We're empirical based. We put out this information. Everything is public to inform regulators' thinking. We teach them to address regulatory gaps. We facilitate the exchange of information among themselves. And, at the end of the spectrum, we provide sort of bespoke consulting, which is what we call technical assistance for those who are in the process of writing a regulation for digital assets.
So it seems from your background, you've worked extensively on the intersection of politics and financial markets. How do you see the role of regulation evolving in the digital and green finance sectors?
Yeah, so the digital and the climate or the green transition are two of the top political priorities of our times. They're also a subject of geopolitical competition, and they're behind the revival of industrial policy, if you want, in the West. And regulation sort of fits into this, right? It plays a part into all this. So when you think about the regulation of digital finance and green finance, we're not just addressing risks around market integrity, consumer protection, or financial stability. It's more than that. This regulation is there to serve a political process, which is to facilitate these transitions and to give a specific jurisdiction an edge in these areas. Having said that, I think they're slightly different. In the case of green finance, you see this link very obviously in the sense that green finance is about creating taxonomies, definitions, and harmonizing disclosures to provide the market with sufficient information with a view to channel investments to the green transition. So it's basically about mobilizing private investment and making sure the funds go in the direction that you want. In digital, there's a bit of that, but I think it's mainly about removing barriers to innovation and providing a steer to that innovation, notably through standardization, because you need to make choices usually. And so regulation is a clear influence in the way you innovate. So again, removing barriers, but at the same time providing a steer in the direction that we're going. Yeah.
So given all this, then how can regulators effectively balance innovation with risk management?
Well, that's a balancing act. Well, there's no silver bullet. I think the first step is you need to try to make sure that any regulation is tech neutral, so that you're not prescribing a specific technology, or more importantly, that you're not impeding the development of a specific technology. But then, as I said, I think there is more than that. This is not always easy to do. If you think about blockchain and the whole concept of decentralization, it doesn't really fit the regulatory apparatus as we know, because regulations are written for intermediaries and centralized entities. So you need to think a bit outside the box in terms of the way you do write regulation and you do supervision and oversight. Obviously, the technology also gives you new opportunities, and you can sort of embed the rules in the code. So basically, it takes, I think rule number one is you really need to have a much better understanding of how the industry works, about the potential. There needs to be a much more dialogue between the regulators and the private sector, and this goes both ways. So the private sector needs to engage more and educate the regulators about what they're trying to achieve. And yeah, at the end of the day, as I said, it's a balancing act. There's no right or wrong answer to this. You need to find a way forward. Taking into account that the technology is going to evolve, and you need to adjust the rules as you go along.
Okay, so let's talk a bit more about your background with the Eurogroup and the Council of the EU. What lessons can be applied from the Euro crisis to the current landscape of digital finance and central bank digital currencies?
So I was the advisor to the Eurogroup president between 2018 and 2020. This was, to a large extent, you could define it as a post-crisis period, and most of our time we were focused on completing the reforms that have been started during the crisis period. But we're also looking at addressing new political priorities. And in the final stretch of that period, COVID, it coincided with the COVID pandemic, and so part of the work was to respond to the pandemic. So it was about devising the economic measures in response to the pandemic. Now, I think the lesson from the crisis, the main lesson, is that the monetary union was in balance, was incomplete, and the member countries of the euro area had to address that in a number of ways, by creating a banking union, by integrating capital markets more closely, by coordinating their fiscal policies more closely, and thinking about creating instruments of centralized fiscal instruments, meaning giving fiscal powers to the center. There's not an obvious read across between that experience and digital finance and CBDC, but I would say that digital finance has the potential to help with the integration of capital markets in Europe. If you think about tokenization can contribute to the defragmentation of financial market infrastructure. I think that's going to be, I believe, one of the drivers of any policy initiatives from the Commission in this space. And the integration of capital markets is widely believed or to be an important action to increase the resilience of the euro area, to prevent, again, that these imbalances from being created between Germany at the center and the countries in the periphery, and the risk that capital markets would suddenly move against the periphery and push them to the brink. So again, I think tokenization, digital finance more broadly, can help with this. CBDCs is a different conversation. I was there when we started, or when Europe started the discussions on the digital euro. that discussion has only got more intense over the years. There's a big debate about what are the motivations for the digital euro? Why should we have it? And if we should have it at the end of the day, I think I tend to think of it as a way to future-proof the euro. I think it's important to introduce it, or that you can make the argument that you would need central bank digital currency for retail to sort of address the reduction in use of cash. I think that's a fair point. There's also another argument that the digital euro will contribute to what we call the strategic autonomy or sovereignty of Europe. That's also one of the lessons from the crisis. Like, European countries need to get together and solve their problems. They cannot wait for others to do it for them. So probably working on a digital euro, thinking of it as an insurance and something that you might not implement already, but you want to keep on the back of your mind, and even what the future might hold. That's probably makes sense.
And are there any potential pitfalls of implementing central bank digital currencies that regulators should be aware of?
Oh, there are many. Again, that's an intense debate that is going on at the European level. I think the two main questions that attract people's attention are around privacy. So if you have a digital currency that the central bank controls, that will probably not have the same level, or people will not be afforded the same level of privacy that they have with cash. And that's one of the reasons why you see so much pushback on the part of the public. I think the other thing is what does this mean for banking as we know it? Because as you know, nowadays, the central bank does not provide money in electronic or digital form to the public. It provides cash, so money in physical form. And banks have the monopoly, let's call it, of electronic money or digital money. Now, if the central bank competes with them over this, then what does that mean for the capacity of a bank to attract deposits? And how would banks fund themselves? And how, at the end of the day, how can they keep on lending to the economy? So these are the two most controversial issues around CBDCs. But you could also, I think that the question is also that most people ask is, why do we need that? What is it that is missing nowadays that would justify us introducing a digital euro? And I don't think that people have come up with an answer that pleases everyone. That is, as I said, very much a debate that is going on at political level and increasingly in society.
Or what is your answer?
I think I hinted at it before. I believe that it is important to have a public form of money in the economy. And if a public form of money that is available to retail users, and if we stop using cash, then it might make sense for the central bank to step in and provide that. But the division of labor between the central bank and the private players is a very tricky issue, and I have not seen a convincing answer to that. So it's work in progress, but I agree with the principle at a personal level. I agree with the idea that we need a public form of money.
So going back to the Cambridge Center for Alternative Finance, how does it market its digital assets for regulators program to attract officials and regulators from around the world?
So, there's a number of things we do. The program is mainly about creating these tools that I described to you earlier. So it's about the Bitcoin electricity index and the others. And on top of that, we have a course that is targeted at regulators, which the purpose is to address the knowledge gaps that they might have. I think we stand out because we're empirical based. We're independent. I think we bridge this gap between the technology community and the private sector and the regulators. There's a big bridge. There's a big gap there, and I think we try to bridge that gap. The other thing that I think it helps us to stand out is that on top of all this, we encourage participants to exchange information and share experiences. We have a sort of a social network that we curate for regulators from across the world to share their experiences, and of course they do it at standard setting bodies and other global institutions. But I think we play an important role there because in many instances, these people want to understand what the other jurisdictions are doing and learn from their mistakes and successes. And so that's by facilitating that dialogue, I think we prove our worth very much.
So speaking of bridging gaps, then how do you approach the challenge of communicating complex regulatory and financial topics to diverse audiences?
So I started my career as a journalist, and turning complex things into simple words is one way you can define journalism, and especially if you're working on policy and regulation. So that's very much close to my heart. I think when I think about digital space, digital asset space, there is a huge gap between the people in the market who use the language of the internet, the language of computers, the language of code, and regulators, especially financial regulators that think about the world in terms of, banks and intermediaries and fractional reserves and all that. So I see as part of my job at university to try, as we were discussing, to bridge this gap and to sort of try to explain to regulators in their own terms what is being tried to achieve with the technological innovation. I think the industry does not always do a good job at that, to be honest. Terms in the crypto industry, for instance, are used in a very loose manner. If you think about the example of staking, for instance, staking refers to something very specific about the validation of transactions in a proof of stake protocol. So it's the assets that you put aside to be able to participate in that process, and then you earn a reward. But the word staking in crypto is used nowadays for any sort of lending product or any product that gives you a passive return. And for regulators, that's completely unacceptable, because staking in the narrow sense of the word creates certain risks, notably operational risks. Lending is a very different set of risks around credit risk. So basically the risk that people don't pay you back. And therefore, they need to be regulated differently. So explaining to regulators that there's this thing that people call staking products. At the end of the day, they're not really staking products. Only a few % of them are staking. And then the other things are lending, and you need to differentiate between themselves. You need to come up with a proper taxonomy and definitions for all these things. That's already a big part of the job. And that's something that we try to do, and I think we've been reasonably successful.
So you've also mentioned the importance of enabling digital capacity building for regulators. What strategies or tools are most effective in achieving this goal?
So, as I said, we need evidence-based research. We need to get people to talk to one another. Regulators need to learn from each other. They need to share experiences. So I would say those are the two main things. The third point is we're what we call digital first at the center. So we try to create these tools and make them available to the public and to regulators. So everything is open, is publicly accessible, so that they can explore and get the information themselves to inform their thinking. I'll say those are the two or three things that are the most important.
Right, so the last question for you is of a personal kind. What would you be doing in your life if not this?
What would I be doing in my life? Well, I have a penchant for the public sector. I really enjoyed my time there. I really liked the idea that I was writing policy, and so that's something that really makes me tick. And eventually, I would like to go back. Obviously, if I were not doing this, this would be a good option.